right, so welcome to Game Plan Sunday. Today is September 20, 2020, and we're going to take a look at the market, what occurred over the past week, what we noticed coming down the pipeline, put all together all this information to see if we can make some money in the markets this week. So take a look at our beautiful website, WallstreetJackboyz.com, right here in your face. Make sure that you guys subscribe if you haven't. It is free to subscribe. But taking a look at our news feed here, we'll begin the session off with the news feed. What events have occurred over the past week. We did have some nice movement in NVIDIA. There was a news post that was posted in here about SoftBank share spike on a deal to sell on to NVIDIA. So that was a good event there. We also had an Apple event here. So I don't know if you guys are watching that live. I like to watch big events like that and see how the markets react towards them. I'm not an Apple fan. I'm a Samsung user, but you know, my wife and my daughter, they're into the Apple things. And so I was a little disappointed because they didn't drop the phones. I don't know if anybody know anything about when they dropping the phones, but if y'all know anything about the phones coming, drop it in the chat, let us know. But they was just basically talking about their smartwatch, smartwatch, and I think some the iPad and things like that, but they didn't hit the main event that, most people would normally like to see. And the market, as I was watching the markets during this event, this stream here, I don't know if this is probably still live. You could probably still go back in there and watch it if you haven't seen it. But the markets was actually, it was falling. I don't know. I don't know if the markets were feeling the same way I was feeling. I was just a little kind of disappointed. I thought it was going to drop, their phones or what have you. That didn't happen. So the markets was actually going down a little bit. As far as the Apple, they were going down. And so also what we had here, female managed U.S. funds outperform all male rivals. This is just an observation looking at statistics here that they had. I thought it was a pretty cool article because we wrote an article a while back about women in this game. There's a shortage of women in this game. It's a male dominant industry. We love to have women to be involved. We played a game not too far back called Build Your Stacks. And my man, Mark, he's not here right now, but his wife was in there. She actually won. And I mean, it just to tell you, women can do this. I don't know if you guys got girlfriends or wives or not, but definitely get them involved, because I don't know if it's true across the board, but, the women that I know, they're always good with money, So, you may need to get your wife, your girlfriend involved so they can get good with this money. So anyway, I just thought it was an interesting article. It was a piggyback off an article that we wrote a while back, which is in our blogs, if you go on the blogs here. Also, the big meeting was the FOMC minutes meeting here. And let me just minimize this a little bit. And so this meeting here, it was pretty much a non-factor, really. It was just the Fed saying the same old thing that they normally say. They're basically going to support the market. They're not going to raise interest rates. They're going to keep on suppressing the interest rates. And, they don't see inflation being a problem. So inflation, again, is the cost of living. The Feds are trying to create inflation, which means that your cost of living is going to go up as they try to create this inflation, because according to the way they're measuring it through the CPI numbers, they are not seeing inflation in the data. So therefore, they think they got the green light to go ahead and print all this money and just let it run, which is going to be a cost to citizens to have to, pay higher goods, higher consumer goods, But if you look at the commodities market, you can actually see inflation in the commodities markets of things, whether it's coffee and cotton, all these things. You can see the prices in commodities. You can see them going up. That's another indication of inflation. And so I just think that's interesting. But what was also interesting is that the Feds are saying that they are not going to do anything. Well, Powell said he's not thinking about raising rates, but they don't have anything in their trajectory until 2024 is when they're expecting to basically possibly raise interest rates. But for as I can see, there's no indication that they can even do this at all. The problem is they raise interest rates, then everything comes crashing down. So they're like they're caught in a really bad situation of what do you do? You just have to deal with the consequences of whatever actions you take. And I don't know if they quite understand the consequences of their policy, but we all are going to have to, pay for it, So either way, inflation is, it hurts savers. So if you got money saving in the shoebox, money in the bank, when they print money, it's hurting your purchasing power. You can't purchase as much as you would because prices are going to be going up. You're going to see that. So savers are being, basically hurt. So there's no incentive for you to do that. And it also encourages, malinvestments, bad debt, where we have, a lot of people are trying to buy houses right now. And I think on the Facebook groups, I even posted, I posted a report about the defaults, over 1 million people haven't paid their mortgages, what have you. You have people that's buying houses, that's trying to buy houses because, again, the Fed policy rate encourages people to do so, but the American people don't have savings. And so you really have a recipe for disaster. And so although it's not, showing itself in the market today, doesn't mean it's not going to show itself here in the near future. So got to be on the lookout for that. Commercial real estate is definitely getting, crushed. But also we have, policy that's in play that's actually preventing people from getting kicked out, right? Landlords, they're not feeling it because they want to make their money, but the government is making it so you can't kick people out and get new people in. And so the problem is that even with, the guys with the, people buying houses and they can't, pay their mortgage, and they have basically their payments are postponed until, the beginning of next year, the payments don't go away. So all they're doing is accumulating more debt. You still have to pay for it. And so anyhow, I just, don't get fooled by the housing data that's coming out. And then you thinking that, hey, the economy is doing great. We are still in a recession. All right. So just don't get this confused. This is still a really, really bad economy that we're in. Now, the stock market, much better situation than the economy itself. And so anyhow, what I'll do is we'll go over this article here in a few, and I want to spend a little more time on this because it's a real deep installment that Ray Dalio had put out here, the big cycle of China and its currency. So we'll go over there here in a second. I'm gonna skip that because that's a big one. We got to take some time on that one. But just taking a look at the unemployment claims here, we had the data that came out on that. Let me switch over to my red. So basically, yeah, we had the weekly employment numbers, and again, you still have 860,000 people filing for unemployment on a weekly basis. So this is really, really, really high. So it's still super high, but it's one of those things where it's kind of chopping around. If you look at the chart here, it's really moving back and forth. It's not really giving us any signs of improvement. We're just chopping around. And the thing you have to watch out, if this thing comes back up, it's going to be mayhem. So you don't want that to happen. You want to see it come down even further. This is what you want to see in employment numbers. But the thing is that there's too many risk factors in the markets right now for me to even be positive. So for one, we got less than 50 days before the election is here. That is a huge risk. But then also we have the pandemic, the COVID, situation also, where it's merging, this new virus with, the flu season is coming up right now. So, there's fear of an uptick in cases or, even, worse, deaths, and so that's a lot of, risk that's in the game right now that, nobody really knows how to factor in. So because we don't know, because it's unknown, it is risk. And so those things continue to happen. I mean, it's really going to be a nightmare. Then also we have the lack of stimulus. So the lack of stimulus, the Republicans and the Democrats cannot come to an agreement with how they're going to spend and how they're going to divide this pie, all this money that they're trying to pass. And so we have a lot of businesses that's being shut down. I think I saw a report that from Yelp, about 60% of businesses that started back up from COVID actually had to close permanently. So they thought they were going to be able to open back up, but 60% permanently closed. I mean, there's no coming back, right? So you had that as well. So it's a lot of, we're pretty much in a poop storm, right? And so my man was talking the other night and he was asking me, just tell me, are we effed or what, right? I'm trying to, mind my language here, but I was like, yeah, I mean, we're pretty much effed in this situation. And it's really going to depend on, the economic advisors and leaders, the presidents, how they're going to maneuver, and their back is really against the wall and they're not going to go to sound money. I mean, it's just not going to happen because it's a political year. And so they're all going to do the wrong thing. It doesn't matter who it's going to be. It's just going to be the wrong thing, and pain is going to get worse. Try to get some short-term recovery, but the long-term things are going to be worse. So anyway, unemployment numbers is pretty much the same, just to show you guys that. And the previous numbers were revised up by 9,000. So you guys know the markets like to move off the first move. You get the real news after the fact, but the move has already been made at the market. So again, the numbers normally always come back higher. They always kind of try to discount those numbers up front. So we'll see next week, but pretty much is the same thing here. Let's see here. All right, so you guys don't know, I've been studying Austrian economics for about 6 months now. Here goes some of my literature that I've been studying, and so this is on the website. If you guys want to get a grasp on some of these things here, there's a list of books here that I've been actually studying. So cool. And Ron hit us up with some Wendy's breakfast thing. I don't even know what this is about. Ron must have been hungry. Ron is not even here tonight. But anyway, that was funny. We got the news about TikTok being banned on Sunday, which is today. But I believe I saw a news feed that's saying that Trump actually let it pass. So I'm not too sure. If you guys comment in the chat on that, if you have any updates on that. So that's an interesting situation. To me, I really don't care much about TikTok. I don't use it. I'm really not into the social media stuff. My daughter said, hey, I could run a TikTok page for you for Wallstreet Jackboyz. And I'm like, okay, do it, because I don't know nothing about it. But anyway, that was interesting. Also, I thought you guys probably want to know that on the 24th this week, Amazon is going to be, showcasing their new devices. The same way we had Apple do theirs last week. So I'll be watching this more than likely on live. This will be on Thursday. All right. And John also talks about Snow. Big money was selling Apple to buy Snowflake. Market is getting flooded with IPOs, too much supply, no demand. Yeah, so Snow was in the headlines as well. And, it started out pretty high, dropped pretty low. It looked like it's trying to stabilize. But you guys know those IPOs are really, really treacherous. We can go back through several IPOs and you can see how they maneuvered in the market where they had these crazy pops and then they fell below. And so a lot of new traders coming into the game right now, and they want to be able to try to get involved and they think that they can get in before they go public. And I'm like, well, what we trade in the market here. And again, if you take our stock trading course, the options trading masterclass, there's a stock, basics class that teaches you about, the basics, the foundations to get your foundations and stuff together. But basically, we're trading what's called a secondary market. Okay. And those things are in the primary market. So you can't get access to it. It means you can't get in the game before everybody else can get in the game. Like Warren Buffett, I believe they say he was able to get his shares for about 150. But these guys are moving in the primary. We can't operate in the primary. We can't buy them until they go public. So I just want to clear that up because there's a lot of new people out and they have hopes that they can get into these things before they pop off, which will be great. But think about it, new person. If you think you could do that, a lot of us veterans will already have been doing that. So just keep that in mind. All right. Coming down the pipeline this week, you guys know we got the events calendar here. And also on the website, you can just check it out over here on the side. In fact, let me just pull it up real quick. And here we go. So you can look at it from the list view. I like to take a look at it from the monthly view. Let me take a look at it from the monthly view. You get a whole lot more data all in your feed. So, okay. So it looks like I do need to update some things in here. But basically what I'm seeing here, again, you guys know this week, here we go. On Thursday, we have the unemployment numbers that comes out. So you can actually click in here, just so you guys know, you can click in here and you can basically click on the link that takes you there. Let me just click on it and show you. So when we post these type of events on the website, you can actually go directly to the source itself, when the release. And so it's a description of when the release is coming out, 8:30 in the morning, of course. You can click on this link and you'll go straight to the feed to get the news straight from the source. So I just think that's important. That's the way I follow things. So I figured I'd just include that on our website. So as you guys know, I pretty much do everything on the website. So I'm building things. I'm also looking for feedback from you guys to make this a better experience in any kind of way possible. So basically, we got the unemployment that's coming out on Thursday. Also, I think we got the some PMI numbers that's coming out on Thursday as well. And then on Monday, which is tomorrow, we have some Fed account information that's going to be coming out as well. So some of those things are a little sophisticated, but that's what we have coming down the pipeline. All right, so let me take us back to the news feed because we had some real heavy heavy information that was dropped on us from the biggest hedge fund manager in the world, Granddaddy Dalio. All right. So I want to cover that here because I haven't seen anybody else cover this, which is interesting. As you guys can see here, I posted in here, Granddaddy Dalio back with another installment. This one has him under a lot of pressure against the powers that be. It's very lengthy and take a few days to get through it. Class is in session. So again, I encourage you guys to make sure you check out the website, stay active on this thing. Because I'm posting things out here. I'm on here daily, you know, even if I'm not live, you know, even I can tap into it from my phone when I'm on the go. But I'm normally in here all through the day. So, but you guys also, when I built this platform, it wasn't to make me the star. It's for community building. So I can't stress it enough that you guys have the opportunity to contribute to the site the same way you will on your Facebook pages. You have your own page. So whenever you hear any information, you can share your information right here on the newsfeed the same way that I do. So it's not like, you know, a dictatorship or anything like this. I wanted to build this site much different from the previous one where it was just, I'm the star. It's like, no, everybody here is out here for the same purpose, and that's to get this money. So again, I encourage you guys, post, share your feed, share insights that you guys have. I appreciate it. Thank you. And your peers will also. But anyhow, this is big. So this, for you guys who don't know about Ray Dalio, this guy, you know, again, biggest hedge fund manager in the world. A lot of people know about Warren Buffett. This guy here has lots of wisdom, lots of money and time to be able to do research that you and I can't afford to even do. So he has teams and he, you know, has a lot of, you know, people to put together crazy research. And he started positioning himself into gold starting last year. That's when I started switching over. You guys noticed we started talking a lot about gold and stuff like that. And we see how well that's been working out. But he's been telling this whole story about, you know, hey, this happens over and over and over in history. He's studying over 500 years of history, and he noticed these themes happen over and over again, which gives insight to how things will play out. And he's just been sharing it. And so it's not just sharing the ideas, it's actually moving with conviction that he knows what's going to happen because he's putting his money where his mouth is at. He's putting his money where his research is at, and things are unfolding as he pretty much said. So it's not that he's a god or anything like that, but I just want you guys to understand that this guy, when he drops information, it's really important that you take the time to research it. And it may be heavy for a lot of you guys, and that's why I'm gonna try to like break it down. I haven't seen anybody else even talking about this. And it's so crazy because I think that, I don't know if they're going to try to shut him up or whatnot, but he feels that this is his contribution to the world before he dies, basically. He's like, he's in his end of his life cycle. He's done did it all. And this is his way to give back of how he's been able to navigate through all the previous recessions and make all this money for his clients. You got to be ultra rich for him to even manage his money. Like, you ain't even rich enough for him to even manage your money. All right. So this guy is really, really important. He's not the only one, but he has, you know, crazy research. So I can't neglect it. So we're going to spend some time here this evening to cover it. And then we'll wrap up with a couple other things here. So I'm going to just take you guys here. Again, it's on the website. You can click to it. You can go straight to the links. All right. The links are posted in here for you guys. It is very lengthy, but let me go here. This is the site here for you guys. You can check it out. So he's been released. This book is not out yet. Okay. This is current studies. The book is not out yet. The book is coming out in November, but he's releasing chapter by chapter. You know, he was releasing them on a weekly basis, and now it's like, you know, it's whenever he can bring them out. So you never know, but he is due to release another one, the next part of this chapter here this Thursday. And so if you want to be in tune, it is really, really awesome work. Trust me. So we're on chapter 6 right now of Ray Dalio's work. You guys can see here. If you want to go back to the other chapters, you can. It is very, very lengthy, I must say. I actually record these. So I have audio versions of them where I can actually listen to them and things like that. So anyway, really interesting. So what I'm going to do is kind of skip through it because a lot of it, I see a lot of people that want to know about it. And again, it's probably too heavy for a lot of you guys to really understand it. If I can, this body of work here, I was trying to tell people who's trying to get involved, they're just now hearing about them. You probably ain't gonna be able to make sense out of it if you just jumping into it. But this body of work right here is phenomenal. So we have a class on our website as well called Time in the Markets. And you guys know, let me just go here, Time in the Markets, where if you get the options trading masterclass, you actually get the Time in the Markets class. It comes included with that class for free, basically. So this is a really long, nice webinar that I did last year. And so I decided to just make it a course. When I started remaking all the courses, I scratched a lot of the old ones, but this one here was one that I just could not scratch. So I'm like, hey, we'll just give this one free because you guys need to know this. And so it's called Time in the Markets. But I was able to do a lot of different studying and things like that before I could put this together. And some of my research came from this body of work as well. So just showing you guys here, again, this class is called Time in the Markets. There's time stamped down here. It is lengthy, but it's a lot of great information. We teach you guys about interest rates, inflation, bonds, the yield curve, everything is in here, okay? So definitely take advantage of that course if you haven't, all right? So, but back to this, the Big Debt Crisis, it is 3 volumes, 3 books in here, really interesting work. I don't know if you guys can see if I can get a little close on it, but you can see 3 of them. And I also heard that you can't really get your hands on these nowadays. I'm not too sure, but Ray Dalio gives a lot of his information away for free. So if you can't get the physical one, you can actually get the, I think he has PDFs on his website where you could download the PDFs and everything. But this is really crazy studying here. So you guys know I spend my life studying. Okay, I don't know everything, but I study tremendously. So anyway, in this part of the chapter, Ray Dalio he's describing the cycles of China. Really, really interesting stuff, because a lot of us, when we're going through school, we know nothing about China. All right. Yeah. I mean, you don't know. They don't teach us about this type of stuff. I'm telling you, it's crazy. And you only know what the media feeds you. You really don't understand things. Now, Ray Dalio, he has this crazy, he even tell you right here that several people told him that it's too risky for him to write this chapter, right? Because the U.S. is in a type of war with China. I mean, he's been calling all of this, but basically for him to write this is pretty risky, you know, because it's going to seem like he is a traitor, okay? And he don't want that to be the case, so he has a lot of disclaimers, you know, so it's really lengthy before you can get to the meat and potatoes of things. All of this is basically Ray's disclaimers, you know, about why he's taking an approach that he's taking, because he wants to try to tell the story from a non-biased perspective, okay? And some of the things that he says is very controversial. And, you know, there are a lot of people who will not agree with Dalio on a lot of his perspectives. Even myself, there's some things that I don't quite agree with as well. Or there are things that I want further answers from Ray himself to explain, but he's trying to play it political because he's a big fish in the pond. But he has lots of interest in China and in America as well. So I'm sure he wants to make sure he doesn't ruin those things. But if you try to look at it from a non-biased perspective, there's a lot of great information in here. And he has some charts, some visuals that's going in here as well. It's pretty cool. He talks about all these different empires, how they come and go. All right. And so if you take a look here, you can see, you know, American empire is coming down. This is the blue line. China empire is coming up super, super fast. All right. So the prediction is basically the projection of the lines. China is going to surpass US. US is going to continue to decline. That's basically the way we see it happen on all these other charts. Empires coming up and down, right? So that's pretty much, you know, and so he really has to be careful about this because, you know, he don't want to get a call from Trump. You guys know what Trump did to Powell. You remember Trump was punking Powell? You know, Powell was over there raising them interest rates. And Trump was like, listen, I'm about to fire your. Next thing you know, Powell, he done took his foot off the gas and start cutting them rates fast as hell. So anyway, you got to be careful. But anyway, he's basically talking about, you know, China, the different dynasties and things like that. But it really, you know, in these prior times, way back here, China has led the world, has led civilization forward in lots of ways. But it wasn't really until this guy, Mao Zedong. So I'm going through a lot of skipping through because there's a lot of stuff. Ray is trying to lay, you know, a lot of groundwork to give you guys, you know, some groundwork before he can really get into it. So he's covering a whole lot in here, right? But basically he's talking about the system of China in a way that's going to show the leaders and why they made the decisions that they made, basically. So he's basically going through, he's talking about how China, unlike America, America is more of an individualistic society or individuals control. China is more of a hierarchy, top-down approach. All right, so that's what he's talking about here. The Chinese government is run from the top down, like a family, and optimized for the collective, while the American approach is run from the bottom up, democracy, and optimizes for individual. So he's basically just talking about in your household as a parent, your kids got to answer to you. You pretty much control the household. So although the kid doesn't really have freedom, the kid must do what the parents say. Now, some households, they let the kids run all over, but most of us are parents in America. We don't allow that to happen. Not in the African-American communities. I don't know about the rest, but we don't allow that. All right. So what he's saying is that their government runs the same way. It's like the government is the parent. All right. And you're going to adhere to those things. But in America, everybody's, free, so everybody's free. It's a democracy, basically. So he's describing communism and democracy, basically, from the two things. I'm trying to skip through it because I know we're limited on time. I'm trying to get to the big themes here. Let's see. So then here we go. This is interesting, right? So in Ray Dalio's previous work here, he's describing the debt cycles or why we have them. And so the reason why you have debt cycles, meaning you have booms and bust periods, is because of the creation of credit, right? And in this new book that he's writing right now, he's really dealing with currencies, right? Because his prediction, his forecast is that the currency system itself is going to be destroyed. Okay. And so I'll give you a little backdrop on some of that too, where he goes way back to the Bible days, right? So it's really good stuff. But this chart right here was interesting because what you guys are looking at in here, what Ray is describing here, this is China's culture here. This is China history right here. So what you guys are seeing in this chart is basically this. Type 1, he's describing hard money, which is gold. So this is gold in this block here. All right, that's gold. Type 2 is a paper money system, which is backed by gold. All right. Then type 3 is a fiat system where you have a paper money system that does not back by anything. Okay. Now I think this is really interesting. Okay. Because what we see going through, he went all the way back. I mean, the 618. Okay, this is a lot. This is a long time. In fact, this guy, we say he studied over 5,000 years of history. Anyway, it's a lot of history. So what he noticed in these patterns here is that, they start out with hard money and then they make their way up to, paper money, right? But then it slams back down like gravity. It comes back to the hard money, which is gold. Then in this particular dynasty here, they try to go back to the paper, and some of them stay with the gold, but eventually they try to go to paper, right? So then they go back to paper, so they're here. Then they unpeg from a hard backing like gold, and they go to a fiat system like how the system that we're under right now today. The dollar is a fiat system, meaning it's not backed by anything. It's a free floating currency system. It's backed by only faith in the government. That's it. So it's worthless, basically. As long as the government keep the faith in it, that's how it has its value. But then you see it slam right back to a system that is secure and is backed by real money. You guys remember I wrote that article, Gold is Real Money? I was trying to teach you guys something about money. So if you haven't read it, please make sure you go back and read it. And make sure you share it too. When I wrote that article, I'm telling you, they don't teach you this stuff in school, so people need it. Anyhow, but we see in the yuan here, in this dynasty, they try to go back to this fiat currency system, and it carried over for a little while, but then it fell miserably. It went all the way back to gold, right? So gold is kind of like what he's showing here is the gravity effect, all right? Where things get extreme and then it has to come back to the original state. Kept it here, then they try to push it up again, right? Then it gets pushed up again. And this is where we currently are today. So he's describing a system that we currently are today. Now, you guys are stock traders now. Most of you are. If you take a look at this thing here, right? All you have to do is see the patterns. That's what we do in stock market, right? So taking a look at the patterns here, what do you think we're going to go back to here, right? What do you think is the next phase of this, right? And you see the patterns, it goes from one extreme to the next extreme. So gold being the extreme here. So you're going from this to this, carry over, come back like gravity. See how long that goes? Then you come back up here. Then what's next, right? The pattern is you go back to gold. Now, I don't know how this is going to impact the Bitcoin, cryptocurrency guys or how they feel about it. This is just research that Ray Dalio has done. And the past is not indicative of the future, not at all, but it's definitely a wonderful, awesome guide. So you let the guide, let the past guide you. And then you can, make some better predictions and forecasting, which is more sound. So, but the thing that I do think that's interesting is that it may not be that hard. It may be that we go from like this time era here, when we went from here to this section here, right? And then they try to come back up. Eventually, it all has to come back to real money. Okay, so this is why you guys, and again, we're seeing a lot of money going into gold, and Dalio, I think that this is his prediction is because of that. Now we have central banks in them that's trying to go digital, right? China themselves going to digital currency, but the thing is that their digital currency is going to be backed by gold, which is a system that's similar to here when they were back in these days, right? So the paper money is backed by gold in this area here, right? And so if we come back to here, that'll be the digital currency, with them trying to go digital, which I think is possible. I think it's possible. I think that is highly probable because in the digital space, it gives the central bankers control of people through the computer systems, right? As Elon Musk says, we already are extensions of our cell phones and this computerized world, this artificial world. And this is why it's important to have gold so you can get your money out of the system. But I think that we can come back here, a system that is, not real money, but is backed by real money. So it can be digital currency, it can be paper currency, what have you, but it'll be backed by that. And so China and Russia, they have been moving because they're trying to move towards, removing America from the world reserve currency. Because we have the world reserve currency status, we have a privilege like no other. So we are far well above and beyond everybody else as long as we had that. But if they could take that from us, it's a wrap. And that's what they're working towards. So just keep that in mind. All right. So I just thought that was a good chart there as well. And a lot of this was really interesting. I'm just trying to go through quickly. He's describing the leaders. And let me just tell it to you guys so I can get it out quicker here. But you guys will see it yourself. There are three leaders of China who basically shape the basis of China. And he's talking about it, but it's important. So let me get through it quickly. There was this guy named Mao Zedong. So I'm just call him Mao, right? Then there was this guy named Deng Xiaoping. Deng. And now we have Xi Jinping. All right. So this is the first level, the second level, third level. And again, they don't teach you guys this stuff in school. This is really lengthy, but I'm gonna try to give it to you quick and short so you can understand how China became to where it's at. So at the time, China was really, really poor country, really, really poor country. Okay. And China owed a lot of money. And there were countries, the Western countries, basically ravaged China. In particular, it was Britain, right? And so what they did is they basically, because I guess China owed them so much money or what have you, they end up taking over the ports and things like that and control trade. And but they still couldn't quite get their way. So what they started doing is sabotaging China with opium from India. So they was working with India to get the opium from there and smuggling into the country, getting people hooked up on this drugs, this opium. And I am heavy into martial arts movies. I don't know if you guys watch martial art movies, any old movies? I love old martial art movies, man. I have my kids sitting here watching with me. I don't know if they're interested or not, but they're gonna sit there and watch it because I like them, right? But in those movies, all this history really makes things make sense, because in a lot of those Chinese movies, you see they're always fighting the drug wars and people on opium, and they're being oppressed by the government and stuff like that. Well, that's what was happening with the West doing to China. And because the West was capitalist, their oppression of China made China resent capitalism. Okay, so I'm just giving you guys, this is what this whole article is about. I did extensive research beyond Ray's article as well to add to it, but basically that's what happened. And so Mao Zedong, the leader, this dude was like in the eyes of the Chinese people at the time. I don't know how Chinese people today feel about him. There are some people who still hold this guy dear, but this guy was pretty much like Jesus Christ in China. Okay, and because he decided that he was going to be the people's champion, right? For the proletariat, the people's champion, basically, the fight for the poor. You know, the government is oppressing people and stuff like that. We got to, the capitalists, basically the capitalists are oppressing people, and that we must overthrow the capitalists and put industry and things back to the hands of the workers. So the workers are going to be on top now. And so this guy, Mao Zedong, he launched the revolution, the wars of, and his doctrine was at the Marxists. So this guy was a heavy Marxist, Karl Marx. You guys don't know about like Marxist socialism and stuff like this. So he was a Marxist, and he followed after Karl Marx. Karl Marx wrote a lot about the revolution, and Karl Marx's view, the revolution is a part of the cycle. It's necessary because it's like capitalism and socialism is a balance, basically, where you go through these cycles of it. And so this is kind of like what he really believed in, Mao Zedong. And Ray Dalio was basically praising him in this body of work that he has. I know he probably don't like me using that choice of words, but he basically was praising him because the guy is super smart. And I think he's trying to indicate that the Mao Zedong guy is super, super intelligent. He's read lots of books and things like that on philosophy, really smart guy. But he was confused that this guy chose the Marxist way. And he wanted to know, as a capitalist himself, why would this guy who's super smart, Mao, choose to go the Marxist way? And everybody knows in society, socialist systems don't work. But it was because of their resentment of the Western world, what they were doing to China at the time. And so this guy he was like the people's champion. People just voluntarily fell into his ranks and his armies and stuff, and he raised up the China. And basically what this guy did, he unified the whole China, which was a part of the plan. And so he was the unifier of China, basically. So I just write unifier of China because the country was divided. But this guy was the unifier. Now, he was a socialist. He was pushing Marxism. He was a socialist at heart. He was pushing it. And basically, he had universal basic income. And, everybody had housing. Everybody had food and things like that. But that system could not work. And so it fell, costing millions of people to die of starvation from famines and everything else, right? Because remember earlier, we was talking about America's more individualist and China is trying to move more like a family structure. But it's some of the problems with that is that individuals have different ends that we all seek. And so what they try to say is that there's a group in that everybody wants to reach this goal and we're all going to share that same ideology. Anyway, a lot of that just never worked and millions of people died. Okay. There's numbers up to 100 million people that they speculate that died because China hides a lot of data. But I think to be conservative, it's probably around 20, 35 million people that died from that. So, but the sentiment about capitalism was really strong in the country. He's already laid the foundation. This guy, Mao, he is like the Jesus Christ of China, basically. And this is part of the reason why China is still communist to this day is because of this guy, Mao. And they got it from Karl Marx and the Russians, Lenin, all right, and Stalin. So they looked up to those. So they was trying to model Russia at the time to grow. Because what China realized is that they were beaten badly. They were oppressed by the West so bad. And they figured out, like, how can we get better? So we can't, basically we can't beat them doing what we're doing now. We got to join them. How are they able to dominate us so much, right? They're using technology and all this other stuff. So then China starts to change and they start to adopt the ways of the West. But this guy, Mao, basically, it was a long struggle, but he pretty much just had a good cause of trying to take care of people. But he ended up kind of becoming a tyrant, right? He ended up killing a lot of people. He started killing people that was oppressing him, people that was having a difference of opinion. People who started to raise up and was questioning his ideologies. He was like, well, he can't have that. And so he starts to just kill people, white people out. He was afraid that they were going to kill him too. So anyway, it was a crazy situation with him. But there's this guy, Deng Xiaoping, who came up under Mao, but he saw things differently. And so because Mao policies are failing really bad, this guy, Deng, was appointed, and Mao was basically demoted. He was still involved, but he had a kind of hide out, but he was like demoted to like 2 or 3, and Deng became number 1. But Deng deviated from socialism. Deng saw the economic, chaos that happened from using socialism. He didn't want that. And so this is where economics and philosophy comes in at, is because economics philosophy figures out that, people's end goal is happiness. Everybody's end goal is happiness, basically. And so how can we keep people happy? And so he saw how the West was moving, how the Europeans were moving, and basically in America, basically. And so he basically detached from the Soviet Union's way, because the Soviet Union basically collapsed, and he wanted to model the US. So this guy here, he actually switched China over to capitalism. Okay. It wasn't just a quick, swift move, because basically he had this saying about black cat or white cat. It doesn't matter as long as the cat can catch the mice. It didn't matter who you were as long as you brought the money into the country. And so the problem with that was that there was no moral system to it. So criminals and, burglars, they make money all day, and so they can bring it in. So anyhow, with that sentiment happening, the capitalists started just making crazy money, and the people the wealth gap started getting crazy. And so Mao ended up relaunching his whole socialist communist situation back, and he started raising his people back up, and his people basically, he started just killing those people. And Deng Xiaoping, he got demoted, basically. And I think he was incarcerated or something. I can't remember what happened to him, but he was basically demoted, and Mao came back into power. This time, Mao, he had his, I don't know if you guys ever heard about the Little Red Book? You ever seen this Little Red Book? There's this thing called Little Red Book, and it's a red book. If you ever seen it, you guys ever been to bookstores or not? But anyway, this is this book that's about Mao Zedong, all of his philosophical quotes and things like that. And his general, Li Bao, actually published this, and everybody in China had this book. It was like, everybody had this red book, and it was basically at this point worshiping this Mao Zedong guy. They had to like bow down to this dude like 3 times a day and everything, but they liked it though. That's what they, he was promising a utopia society, a society that is of equality and all this other stuff, right? Which is Karl Marx's, stuff. And that's what people were after. And even after it failed, they still was after the illusion that we can have a utopia society. But what ended up happening is that he became more of a tyrant, basically, because if you went against that ideology, then, you had to be punished, and he had to get rid of him. And so anyway, so a lot of corruption and things like that happened. But the guy, Mao Zedong, basically ended up dying. And then Deng Xiaoping came back into place. Him and his people were released, and he took charge again. And his vision was more capitalism, because he realized that people have more money, then they can actually be more happy. And so he started back with the capitalism stuff. And from this moment, China blew the hell up. All right. And this from this guy, Deng. He opened up China to the rest of the world. Mao had China closed off from the rest of the world. Deng opened it up. And so this is how China was able to build to where it's at today. And now we have Xi Jinping, who's the leader of China today, who's carrying these things on forward. Okay, so this is how China is actually built up so drastically fast, is because of capitalism, not socialism. Although Deng was, some people argue that he was no better than Mao, right? Because he started doing the same things, actually. So he's still communist rule, because what he realized is that they figured that democracy itself will disrupt the progress, causes too much problems. People start to rise up and want to express themselves and all of this stuff. So he couldn't have that. So he still had the same communist views of communism ways of Mao, but it was just how to divide the pie, make the pie. He used capitalism for it, but he started killing people and crazy stuff as well. And basically, he had to take a seat back as well until he died. And anyway, just give you a little bit of the history. This is stuff that Ray Dalio is describing in his paperwork. And I'm just pretty much trying to sum it up for you guys here because it's a really, really lengthy paperwork. But that's pretty much what he's showing you, how China came up to where it's at. And some of the things that he was talking about in here was some of the ways that he liked about Marxism, Leninism. You see here, he's talking about that. And, I questioned Ray on this the last article that he wrote. And I figured he was going to go into this. I just didn't know how he was going to come about it and say it. And I'm still not too sure if he's saying that he's saying he's a capitalist, but I think there's certain things that he kind of aligns with the Marxist and socialism, right? So basically what he says is, capitalists know how to grow the money, but don't divide it well. And with socialism, divide the money well, but don't know how to grow the money. And basically it boils down to this, okay? Capitalism is a system that grows productivity and wealth, and socialism kills productivity, okay? Socialism kills productivity. It kills the entrepreneurship spirit, and therefore it runs out of money. And this is the reason why socialism pretty much never works, is because it depends on capitalism, the money that's made from capitalism, to give to people to try to create a utopia society, but it eventually runs out of the money. It kills productivity. So then it has to revert back to capitalism anyway. So that's the whole problem with trying to create a utopia society, a society of equality and all this other stuff that people wish for. It is much more complicated than just trying to make things just. And then you have to get into philosophy about what is just. Who determines what is just, right? Not everybody believes in a Christian God. Not everybody believes in a Muslim God. Not everybody believes in the God, period, right? So how do we determine what's just? So then you have to get into philosophy and all these other things, right? So there were some things that he talked about in here about Marxism's dialectical materialism. And this is some real deep stuff here. But I would offer you guys this book here. This book here is called Theory and History, and it's by Ludwig von Mises. And he's pretty much like the Jesus of Austrian economics. All right, this guy here. And this book pretty much describes all the stuff that Ray Dalio's been talking about. In fact, he's like the founder of the business cycle. So the economic cycles, this guy's the guy who's basically discovered all of that, talked about it. Really wasn't popular because he was against the mainstream stuff, how they were trying to use data to engineer society. And he basically identified that, humans are more than just chemicals and data. There are some things that you can't account for in the brain of humans, which make humans act the way we do. And so he breaks economics down into human actions. And this is the reason why you see Austrians on TV or YouTube describing certain things, they're able to articulate it much better than pretty much anybody else, because they get to the causality of why these things happen. So you see guys like Peter Schiff, he's an Austrian. And so when he's describing all these great things about the economy, it's because of the framework that Mises has applied that goes into human action, basically. So anyway, it's really good stuff. I recommend that for you guys if you want to learn more about this type of stuff. But this is where Ray Dalio is basically left us off with, and he's going to have another installment this week. But he's basically talking about the economic strength of China and where we going at from here. What happens, and basically he's forecasting the destruction of the dollar. That's basically what's happening. And, what's going to be next, right? So I've taken up a lot of you guys' time on that. Did y'all enjoy that little economic lesson? I know that was a little lengthy, but let me know if you enjoyed it or not. I don't know if you did it or not, but I put it here. This is what Ray Dalio said on Market Watch, right? He said, within the next 5 years, you can see a situation in which foreigners who have been lending money to the U.S. won't want to, and the dollar will not be as readily accepted for making purchases in the world as it is now. Okay. So he's talking about like countries like China, not, if they decide not to accept the U.S. currency, them overthrowing the U.S. currency, this is going to be really, really bad. And so he's talking about even in here, the U.S. does not have a good income statement and balance sheet in dealing with the rest of the world, right? Is running a deficit to the rest of the world that is financed by borrowing money so that we are producing liabilities. So we're not producing anything but liabilities, okay? Remember, China's the production economy now. China's doing all the manufacturing. And so all the spending that the feds are hoping to create, I mean, this stuff is to buy Chinese goods because everything that's in your house is made in China. Okay. So it makes things a little more complicated, not to get too much into it, but basically we kind of need one another, but we kind of basically need China a little more than they need us because they can actually, their economy is not so poor. And this is the reason why China's been able to grow in such a little time. China's the miracle of the day, because of their growth has been so fast. Now, I will say this, that China, I know a lot of people have a lot of faith in China, but see, China is very, very crafty in engineering things, right? And everything isn't what it seems to be. It's when you focus on one set of data, say for instance, you got all these forms of data, all these different sets of data, and this data outperforms all the rest of the data. And you say, oh, we're doing so great here, right? And so you highlight this, that our economy is growing just that third, but you neglect to highlight what's going on in this part of your economy, right? What's going on in this part of the economy? What are you sacrificing to get this number up to where it's at now? And see, this is what they do with economics and statistics. They, trying to drive numbers, but you don't really get the full picture. And so it's not that the numbers lie. It's just that the interpreters, the people that's interpreting what's happening in the data, they spin a lot of the stories or they neglect things. And so that's where the problem comes in at. And so the reason I decided to study economics is so I can, have a better grasp and explanation and understanding these things as well. So anyhow, that's kind of what you see. So with China's economy going up like this, economically, because they figured out that if you grow the economics, you can make, you can surpass the Soviets and the U.S. So they've been having a strong focus on free market, right? And so this is why you can see a lot of companies, a lot of people from, Wall Street, a lot of young guys from Wall Street have left America and went straight to China. They're over in China because China doesn't have as many rules and regulations. And so if you want to start a business, you can go to China and you can actually get it on and popping like this week. No problems, no rules, no regulation. But in America, that's do that same thing. You got to go through the SEC, the FCC. You got to go through so many CCs, right? And you got to go through the I's, the FBI's and all. You got so many regulations to go through. It's just crazy. So it costs extra money to go through those processes, and it takes time. It takes too long for you to get your products manufactured, and it hurts a lot of entrepreneurs. So a lot of companies have gone to China. So China says, well, we'll focus on that part. They don't really have many rules or regulations at all, really. So a lot of people have been going over there, but we're at a point that's having an impact on American economy because a lot of those jobs that could have otherwise gone to Americans don't have those jobs available. So now you had this, tension between Americans and China, which we are really at war with China. For those who don't know, we are. It's just not a shooting war, right? Dalio says that it always ends up in a shooting war. It goes to economic war. They go through tariffs and sanctions before it goes to shooting. He hopes that it doesn't go to shooting, but he said through his 500 years of data, it always ended up in shooting wars. Don't know how that's going to play out. Hopefully they don't play out, but more than likely, that's the way this thing is going to play out. So, and I was listening to the former Treasury earlier today. He was saying that the worst thing that can happen right now is if China's economy, crashes right now, and the people go back to blaming capitalism. You remember Mao is the guy who they pretty much worship over. They got this guy's portraits all over the place. They got statues of this guy. And he was anti-capitalist. He killed the capitalists. He took the land and businesses from them and gave back to the people, blah, blah, blah. They want that. The new system is capitalist, and the wealth gap in China although they've grown so fast, but the wealth gap is so extreme that, I mean, you have people that's in dire poverty over there that's crazy, and they don't care about dying. And so I think there's like another revolution that is kind of boiling up, because the people, they want to go back to communism. They don't want the outcome of communism, socialism, but they want what the illusion of socialism promises, where everybody's equal, basically. So anyway, it's, some complicated matters. I just wanted to kind of describe that for you guys to see what's going on. So hopefully that plays out. But with that being said, because you guys understand a little more about China and their economy, they don't have many rules, and they're trying to attract all these foreign investors, and that's what they've been doing to grow. The guy, Deng Xiaoping, this is what his legacy has been. And Xi Jinping, who's running now, he's carrying the legacy forward. And so they have more of a free capitalism type of economy, not society, which is still communist rule. But as far as business goes, they have a freer system than America. This actually explains why they've been able to grow exponentially in such a short period of time, whereas America is slowing down because we have too much bureaucracy, right? And so you see companies like Tesla over here with America, with the electric vehicles. But look at all the electric vehicle companies in China, like NIO, right? You guys remember NIO? What's the other one called? Xpeng? Like, China is so heavy in that, and they're leading with technology because they realized that at the time when the Westerners were oppressing them, they were able to do so through technology. And another thing, I'll make this point, then we'll get to what we need to do. But they had a one-child rule in China because, again, population was too big. They didn't have enough resources. So they put in this one-child policy. And so there's a lot of pressure on Chinese kids, because they only have one, to come to America and to do greatness and become rich. The guy, Deng, his philosophy is that he told the Chinese people to get rich. That was what he ran off of. It's like, whatever is necessary for you guys to get rich. So, and they know that as you have to have the education for it. And so the people of China, they are more focused on that. And they realize that in order to do so, they have to have a strong focus in the STEM, STEM things, which is mathematics, science, technology. So this is why you have a huge focus in those programs. You see Chinese students come over here, and people think that they're just smarter than everybody, which they super are. They really are smart. It's not that they're smarter than Americans. They're actually just more focused, and we have much more distractions in America. Most people, they want to know what the latest football game is, the latest basketball game, and these kids are trying to push their legacy forward. They don't have anything else. That's all they have. That's what their whole family depends on, them coming to America, get this education. They bring this shit back to China and make a lot of money, right? Because now China is no longer socialist. It's a capitalist society. So you can actually get those skills, come back to China, and make you a lot of money. So anyway, that's the word on that. Let's take a look at the markets here real quick, and then we'll bring the session to a close. So remember, the theme was the 50 moving average on the markets was a key level, is a key level, that it needs to hold this 50 moving average. And if it does not, then it's going to break pretty drastically. We're seeing price right now falling underneath that 50 moving average. So I'm trying to make it bigger for you guys to see. We'll switch back to yellow. All right. So this is the 50 moving average. We're seeing prices testing. And right now we're seeing price, it looks like it's breaking underneath it. And again, this is, after hours right now. We'll have to see what it looks like tomorrow. But I do have this hard level here, and we see the price actually hit it. Look like it's going to try to bounce off of it. But can it sustain that level, right? Can we make a bounce to come back up here, or do we break? So that's what I'm looking at, right? If price breaks here, then we fall to this next level here, all right? This is in the S&P 500, okay? And just so you guys can see, we're pretty much back underneath the March highs, okay? I don't know if you guys noticed that or not. All the noise we were making was back here before the market crash. I said March, February, excuse me. And so as you guys can see, the price is underneath that level again, okay? So we had a blow off top up here, all the euphoria in the world, and then now we're back down, and looks like we're gonna actually make a drop back down to these levels here. And those reasons could be the risk that we was actually talking about earlier, with the election coming up, with the lack of stimulus in the system right now, with the Fed's inability to actually stimulate because they're pumping in a lot of money, but we're losing jobs, by the hundreds of thousands, and then companies are closing down. So even the stimulus that the Feds are, providing is still not, it's still not producing anything. So it's a lot of risk in here for that. And as we get closer to the election, things are going to get really, really whippy. The markets are going to be crazy. So we start to move more from a swing trader market to a day trader market, meaning that if you get, 15, 20% on one trade, you may want to consider closing that out immediately, because the next day the markets could rip the whole other way because of, the politics that's happening right now with the election and those other risks that we were just naming. So just keep that in mind. We're moving more to a day trader market. All right. So that's the ES. Let's take a look at the Nasdaq. Same thing, the Nasdaq is actually broke underneath that level. As we can see, the 50 moving average is right here, and the Nasdaq broke underneath it. All right. So it looks like we may fall right up into this zone here. Okay, but we're still above the February, March highs before the crash. So have on that. Now, I think we're in a tricky situation here with gold. All right, so this is the gold market here. Gold is in a much better situation, if you ask me, than equities are, but it's a very tricky situation because it's squeezing and it's going to have to make a decision. We just don't know when it's going to make a decision, but it's basically going to be based off of the strength of the dollar. And that's what we're seeing. If you guys notice, the equity's been down, gold has been down. Equity's up, gold is going up. But really, gold has really been steady. All right. So since gold, came up to this level here, it's been chopping around and it's squeezing, it's compressing. It's energy pimped up in here. All right. Now we had this buy trigger in here. And that's the reason why a lot of people got into some gold positions last week. So don't feel bad about that, Dustin and KL. Got a buy trigger in here, but it's tricky right now. It's going to have to make a decision one way or another. But you see, equities has been down. Gold hasn't been down as drastically. You see, it's been really steady, right? Whereas equities, as I just showed you, is going down bigger moves. And I would like to see it break free from its peg that it has with equities, because it's distorting my view of it, really, because it's moving with equities. And I don't like that. It's just crazy, because normally it doesn't move that way, but it is. And so we're going to have to watch the dollar this week to really get some decision on gold. But what I look at on gold is the 50 moving average. Same way we looked at on equities, where equities is already under their 50 moving average, but gold is still trading above it. So as long as we're still above the 50 moving average here on gold, I am still bullish on this thing, right? For the long term, anyway, I'm bullish on gold for the long term anyway, but I'm just giving a short term perspective, like coming into this week, from this month, what have you. I think we're going to have more risk coming into the markets. And so this is what makes it tricky, because normally when risk comes in, investors start to pile up in gold. Okay. So we have to watch that in gold, and the same fares for silver as well. Same thing in silver. As you guys can see, silver is holding above the 50 really, really well. If gold falls, silver will fall to this next level here, right? And it's almost forming like a head and shoulders, if you will. Almost. That's what it's starting to look like. Don't really know. But we'll see if this shoulder breaks or if it holds. So it's not really looking too good. But let's take a look at the dollar here real quick. And we see the dollar's moving lower. All right, so we can see the dollar's been moving lower. Again, this is the value of the dollar that you save it in your mattress, losing this purchasing value. So we're seeing that happen. And the Feds are trying to create more inflation, so this should continue to move lower. But I don't quite know if this thing will start to stabilize and start to come up. This is what we have to watch for. see back here, it started stabilizing, right? So I remember back here, we was chopping around, we finally broke, right? Then we started trying to stabilize again before we broke again, right? So you see those bear flags in there? So very similar to where we are now again, where it's like it's trying to stabilize. The question is, does it rebound or does it continue to break? And from there, we get our decision and go. So that's what I see with that right now. I'll take a look at a couple of stocks from you guys real quick because I know he's got a lot of time. But again, I'll timestamp the video so you guys want to watch the the replay and everything. You'll be able to get to the points that you want to get to. Eli Lilly is in a good position here. I definitely like this one. As far as a positive movement, got a nice floor right here at the 200. Prices came down, and the 50. See that resistance there? Price is broken above that 50. So we're seeing the momentum is shifting upwards, and so 1618 retracement up here would be the resistance level, key resistance level that I see coming up on this one. But I do like that to a positive move. OSPN, all right. All right, OSPN, one span, all right. So, this is a very interesting chart here. And so this chart here, let me just get a swing here. This is a gap filler. It's looking like a double bottom, if you will. So when you take a look at the fall from grace, a floor here, and then you have a floor here. Looks like a nice big W. There's a buy trigger right here that says, hey, get in, get in. And these gap fillers, they, if it comes up, if it breaks above this, then it's going to fill this gap here. For those that don't know about the gap fills, this area here, normally what happens is that it fills that gap. So the price will get moved back up to that level. To me, the 618 retracement is a good level here to the positive move on that. It is in a squeeze, of course, right? And you see the trend is moving up as well. The key thing here is, can it stay clear this resistance up here? If it does, then you have a target right up here. On a bounce play, OSTK, all right. For Overstock, it's an interesting one, Dustin. It's not the best chart in the world. It's almost like a bear flag, if you will, though. So I'm not too sure. With momentum, we need to see if this thing is going to continue. But so what's tricky here is that it's starting to look like a bear flag. Let me switch my thing here. All right, it's starting to look like, flag here. It could go either way, right? We want to see if the price can move above the 9 moving average. If it does, then you can, look a little long, but it's a little tricky here for me, especially with the momentum looking like it's trying to shift upwards, which that's a good sign for it. If you're looking on the upside, this 86 target up here, where the moving average is at, that can be a potential resistance zone there, but it's need to clear that. And so right now it hasn't cleared a 9. So for me, I don't like it for a bounce play. This could play out to be a bear flag where it goes down to the 100. So that's the way I see on that. What's the ticker for it, John? Let's see, QDL. Yeah, you're up against a hard resistance on here. It looks better for a bounce play because that 200 moving average where it's at. It's definitely fell from grace really hard. I would definitely want to know what in the world happened with this particular stock, because this isn't in the March crash drop. So what's happened with this particular stock? For me, I would like to know the story on it that made it fall from grace back in August. It hit that bear flag mode, right? Bingo. Now it's held its support right here at the 200. So I do like this as support. Obviously, this is holding to be true, but this 100 is really strong. Research time, you'll post. Okay, so yeah, definitely want to do some research on it. If it fell like this back in March, then obviously we know the reason why. But because it's in August, the markets are hitting new highs, and this one was not moving with it. I would like to know a little more about this. Why did it fall from grace so sharply? But this 100 moving average is a strong resistance point. For that reason, because of this timing of this and this 100 moving average up here, I don't like it for a bounce play. I know the charts are saying, which could be good, but I need to know a little more about the story on this, because this could be a situation that this stock may not be able to come back from. So I don't really know, but it's got some resistance level, the 50 and the 100 right above it, which is going to be a strong resistance level. Now, if it breaks above that, then that's good. But yeah, I don't like it on a bullish play. Okay, thank you. Yeah, and General Mills. Let's see. All right, it's been a while since I charted this one. All right, so General Mills had a squeeze. The squeeze fired short. The question is, does the squeeze exhaust itself, right? So we had a squeeze in here, and squeeze fired short for a lot of bars. We see the squeeze fired all the way down here. And it's looking like that is maybe exhausting. And I think that what you want to see on this one, John, is if it has overshot itself. And it's just kind of looking like it's overshot itself, right? We look down here, it looks like it's kind of overshot. And what typically happens, like the rubber band effect, when it overshoots, you can kind of get a nice bounce back. But you got earnings coming up, and I think that's going to be tricky. So for me, I don't really want any parts of it. I mean, but yeah, no, it had this nice double top in there, came down, and it could be a flag, a bear flag, that from the double tops coming to a bear flag, and this thing could continue. But the 200 is a strong support, so you definitely want to watch how the price moves around here. It definitely looked like it's in an oversold territory, so my expectation would be that it should try to consolidate around here. But with earnings coming up, ain't no telling what's going to happen from that. Yeah, wait until direction confirmation. Yeah, you're probably going to sit on your hands again this week. The SPY charts remind you of pre-tax war with US. Yeah. Yeah, so remember, yeah, the trade war situation. It's a lot of risk that's in the game right now. So things are very choppy. It's going to be really choppy. That's why I say if you get days where you're up, 15, 20%, consider taking profits. If you don't hit the home runs, don't kill yourself. Be nimble, be quick, take profits often. See what the shirts say, right? This is that environment again. You got to take some profits often, and don't let your losses, carry out too long. If you get stopped out, do what you got to do. Play by your rules, understand that. And because you can always get back in, you can always get back in. So just remember those things. So definitely, okay. My man hit me about, let me see. Somebody else wanted to know about Tesla. My bad. Let me get that real quick. Let's see. Yeah, so Tesla is still in it's in a nice bullish position, actually. Again, I just have my own bias against Tesla right now, but we have to obey the charts. So the charts are saying that it is squeezing up in here. It is a little high. It's a little risky here. I don't think we're going to see new highs in it. We may get up to about the 786. Prices up in here. We'll have to see how it's going to play out. Tesla is a tricky one. It's a lot of hype in it. But as I mentioned last Game Plan Sunday, Elon Musk has a way of, he's a great salesman. He overpromises and underdelivers. I'm not quite sure if he can deliver what people are expecting him to deliver. And he's quite divided, with all his companies trying to do space, trying to do underground, transportation. He's doing a whole lot for me. If he was focused on Tesla, I would be more bullish. But because he's so divided, for me, that's too risky for me. He is way too divided. But just looking at the chart is bullish. He hold above the 618, got a box in here. You got a high in here. So if you get some hype, then you could make it back up to those new highs. I doubt we see that, but you can definitely see that. Bonds is getting killed, and there's no real place for investors to put money, but they should be putting it in gold. But instead, they're speculating in these stocks. And so that's why, it's going to be a very volatile, market where the indexes will be going down, but you want to try to find those, as my mentor called them, the honey badger stocks, the ones that's moving in disregard to what the major markets are moving. They're moving counter to the indexes. So we'll be looking for those throughout the days in our on our website in the chat room. So make sure you guys check out the chat room. And one last one from my man here about the energy sector. All right. So yeah, I mean, the energy sector is definitely in a downtrend, you know, so that's clear as day, you know. When it comes time to short though, shorting is a little, to me, it's that's why you have some investors, they focus on shorting and some of them just focus on the long. What's hard about shorting is trying to know when to short, right? You know, when you hit a bottom, right? Do you short right here? No, because it reverses, right? The short was when you were up against resistance, right? So that's how you kind of want to play the short side, right? When you play short, hey, I want to short this, short it at the resistance. Like right here was a resistance zone, right? So after it fell from grace, it came up in here, hit that resistance zone, you got that trigger as you see it played out, right? Even here on the shorter time, when it was up against the 9, you short it up against resistance. You don't want to short at the bottom. And if you see it starting to crack above that resistance, then you don't short, right? Because it's gonna make its move above it. Here was a good short time on this particular stock, as you see up against that strong resistance was the 100 moving average. And here is still a tricky zone because price is looking like it's trying to come up above that. So ideally, if you want to short it, again, it is a bearish stock, but the best times to short it is when it's up against like a resistance zone like this, and you start to see momentum start to shift. So that's the way that I look at that. Hopefully I answered you guys' questions. And hopefully you guys like this session, because again, I went through a lot of work, covering Ray Dalio's work. I haven't seen anybody else cover it, so I just thought that I would actually do it because it's really interesting stuff. And again, we're still trying to make smarter traders and everything else. So make sure you guys check out the website, courses, chat room right here at the bottom. Remember, when you're on the home page, you're not going to see the chat room. You have to log in. So when you're at the home page, it is not going to, you're not going to see the chat room. You're going to have to log into the website and come to any other page except for the home page, right? So when you do that, I'll show you guys the home page real quick. And I will be making those short videos, John. Those have been on my agenda, but you guys know I am a human being. I have lots of things. So when I get to it, I will get to it. But this is the home page. You guys see on the home page, you're not going to see the chat bubble on here, right? And so in order for you to actually get to the chat room, you have to just log into your account. And if you log into your account, you'll see your name and icon show up right here at the top. And you can navigate pretty much anywhere on the website, and you'll get the chat bubble. So I tell people to constantly, go to your dashboard or go to your profile or your news feed. I'm definitely at the news feed here because I'm trying to post up in the news feed or in the chat room. So just remember those things. When you get in, then you get to the chat room, which is a small bubble at the bottom of the screen. All right. So with that being said, I appreciate you guys' time. Let me talk your heads off. Make sure you guys get you some gear. It's cold outside right now. Get you your sweaters and your hoodies and all of that. Get your mask and all that. WallstreetJackboyz.com. You can actually get those things right here under merch at the top of the screen. So with that being said, you guys have a great night. I'll catch you in the markets tomorrow. Peace.